So, what is the deal with PayPal? Is it this forgotten tech giant just waiting for a comeback? Or is it yesterday's news getting slowly eaten alive by the competition? That's the huge paradox we're digging into. You've got bulls and bears who are fiercely divided on this one, and we are going to unpack both sides of that argument.
Here's how we're going to break it all down. We're kicking things off with one investor's massive high-stakes bet on PayPal. Then we'll get into the bull case, first by looking at the hard numbers, and then the vision for the future. After that, we'll flip the coin and explore the bear case, all the doubts swirling around the company. And that will all lead up to the big question. Is PayPal a hidden gem, or is it a value trap?
You know, to really get the bull argument, you have to look past the charts for a second. We're going to start with a story of some serious conviction. A single, massive bet that really frames this whole opportunity.
That's a quote from investor Ryan Daniel Moran. And listen, he didn't just dip a toe in the water. He went all in. He made PayPal the largest single stock position of his entire life. A move like that, that's not just a casual bet. That is a powerful statement of belief in where this company is headed.
$180,000. That's a lot of conviction. So the real question is, what exactly does he see that maybe the rest of the market is missing?
Well, to answer that, we've got to move past the story and get into the nitty-gritty. Let's dig into the numbers and see how they build a foundation for the bull case on PayPal.
You really have to see where this stock has been to understand where it is now. Back in 2021, PayPal was flying high, trading above $300 a share. Then the tech crash happened, and it just cratered, all the way down to $50. Now it's recovered a bit, sure, but it is nowhere near its peak. For the bulls, this isn't a dying company. It's a company with a massive sales sticker on it.
Okay, before we get to the next big number, we need a quick definition for a super important term: free cash flow. Just think of it like this. It's the actual cold, hard cash a business has left over after paying all its bills and investing in itself. It's a really powerful way to see how financially healthy a company truly is.
And get this, PayPal is expected to generate $6.75 billion in free cash flow this year. At its current price, that's almost a 10% cash return. So what that means is, even if the company doesn't grow at all, it's still a cash-generating machine. And for value investors, that is a huge green flag.
So, how do the bulls get to their target price? Well, it starts with the earnings per share today, which is about $4.50. They project a pretty steady 15% growth each year, which gets them to a future EPS of $16. Now, when you work that back to what it's worth in today's money, their models say the stock's fair value right now is around $120 a share. That's nearly double where it's trading today.
And on top of all that, PayPal has authorized a massive $20 billion share buyback. Basically, the company is using its own cash to buy its own stock. This reduces the number of shares out there, making the ones that are left more valuable. It's management screaming from the rooftops that they think their own stock is a bargain.
But look, a good investment isn't just about the numbers, right? It needs a great story for the future. So let's shift gears from the balance sheet to the boardroom and check out the new vision for PayPal.
This quote from the new CEO, Alex Chriss, is huge. It signals a major pivot in strategy. See, PayPal doesn't want to be just another button on a checkout page anymore. The new goal is to become this integrated commerce platform, which could unlock a way bigger market for them.
And here's their three-part game plan to get it done. First, they've got Fastlane, which is a one-click checkout to go head-to-head with their rivals. Second, their stablecoin, PYUSD. This is basically a digital dollar that could turn into a huge profit center from the interest they earn on the cash reserves. And third, they're finally going to monetize Venmo's massive user base. We're talking over 50 million people. For the bulls, this is the engine that's going to power the next wave of growth.
Okay, so that all sounds pretty great, right? But hold on. What if all that value is just a mirage? This brings us to the bear case. And the big fear here is that PayPal isn't a deep value gem at all, but a classic value trap. You know, a company that looks cheap for some very, very good reasons.
If you ask any PayPal skeptic what the #1 risk is, they'll all tell you the same thing. The competition is absolutely fierce. The whole payments world has changed, and PayPal just isn't the only game in town anymore. And man, the list of competitors is a real who's who of tech. You've got Apple Pay and Google Pay, which are built right into our phones, making payment seamless in a way PayPal struggles to match. Then there's Stripe, which just dominates back-end payments for businesses. And of course, Klarna and Affirm have basically cornered the whole buy now, pay later space. As one Redditor put it so perfectly, these guys have simply eaten their lunch.
This is where things get really interesting. because it shows how bulls and bears can look at the exact same fact and see two completely different things. Remember that $20 billion buyback? Well, the bears argue it's not what it seems. They say a huge chunk of those buybacks just goes to covering new shares created for employee stock plans, meaning the actual benefit to you, the shareholder, is way smaller than it looks.
And this quote, this just perfectly captures the frustration that so many investors are feeling. Even with all that cash flow, beating earnings, and all those buybacks, the stock has gone absolutely nowhere for 3 years. For the bears, that's not a coiled spring ready to pop. It's a sign of a company that's lost its mojo.
So, this brings us right back to the final, crucial question. We've heard the really compelling case from the bulls and the very serious warnings from the bears. It is time to put it all together.
And this right here, this is the PayPal paradox in a nutshell. On one side, you have this cash flow machine that's trading at a really low price, but on the other, you have brutal competition and a market that seems to have totally lost faith in its future.
But even with all that skepticism, the bulls see a ton of upside. Their price targets range from Ryan Daniel Moran's $120 valuation all the way up to a projection of $185. It's pretty clear that for those who believe in the turnaround, the potential reward here could be huge. And so that leaves us right here with the big question. Is this a moment of what they call maximum pessimism, the absolute perfect time to buy into a sleeping giant just before it wakes up? Or is the market right? Is PayPal just yesterday's news, a classic value trap waiting to catch unsuspecting investors? The answer is going to be one of the most fascinating stories to watch in the market over the next few years.